Hello everyone, my name is Phil, I'm with Pragmatic Trading and it's so nice to be here with you today. Today is Monday, the 6th of November 2023, and today's video will be very useful and very interesting, so if you have patience, if you want to learn something new, please stay here with me until the end of the video. I guarantee you will not regret it. So this video will be focused on the weekly analysis. Nothing significantly has changed in the past week and during this weekend, so my bias and my weekly analysis pretty much stays the same. The second part of the video will focus on something way more important. I will be talking a little bit about distribution, accumulation, emotions on the market, psychology of trading, of investing, etc. So please stay with me. So if you're ready, let's buckle up. Let's start with the weekly analysis first. So I always start my video by showing you what did I say during the last week, during the weekend, etc. So let's start with this post. As most of you already know, and for the people that don't know this, this channel, or me as a trader, as an investor, I will always have targets both above and below. So last week I've done a thorough analysis of some fib pools that I have, and I've got some targets above. So I don't want to go into details about how did I get these targets. I'm just gonna mention these targets, leave them to you, give them to you, and you can do with them whatever you want. So we have these green lines, or let's say these green rectangles. Ideally, if Bitcoin, if this asset goes back down to these levels should hold if this range wants to remain bullish. Okay, we have this these two red lines, which could prove themselves as very important resistance lines. So if we talk about my macro bullish levels that I will be watching carefully, those levels will be 37.2, 38.2, 42.3 and 4, and 44.4k. So those levels will be of great significance to me if we get there. I will be looking to fade moves in those areas, okay, with a great risk management to mitigate my risk, but those are the zones where I expect a stronger rejection. Okay, now let's take a look at the post number 2. Where is it? Give me a second. I think I've lost it here. No problem, I'll find it in a matter of seconds. So what did I say on November the 5th? Like yesterday, Sunday, beautiful weekend, beautiful Sunday. I hope you had a beautiful weekend too. I went and I tried to catch some fish. It was a successful fishing session, so I had some relaxation, right? So just a friendly reminder, while 99% of crypto Twitter is heavily bullish, even the most violent markup phases have a retracement. Now look at this. Ideally, you would have a long from the bottom of the range and short from the top of the range. So long from the bottom of the range, short from the top of the range. Then you don't care about the outcome. So it's my last warning. Of course, this is some kind of a joke. You don't have to be warned. You're all grown-ups and adults. There is no need for you to be warned if you mitigate your risk. So why do I say you don't care about the outcome? How can one not care about the outcome? I will find out that for you in the second part of the video. For now, let's focus on what we have right now, right? Let's go on to the daily chart and let's see what has changed, if anything has changed at all. So what do we see? We see the volume decreasing, so market participants are not so interested in opening positions here, but at the same time many people are opening positions and getting stop loss above and below, right? So the volume is decreasing and Bitcoin is creating higher lows. So many unvisited wicks and higher lows. So that is one kind of a divergence. We also have a higher high and a lower high in the volume. What do we have in the RSI? I've mentioned this at least 5, 10, 16 times in the past 7 days or 2 weeks. So we have the lower high in the RSI and a higher high in price action. That is a regular bearish divergence on the daily chart. I don't have to remind you how the daily chart is very powerful. So if this divergence plays out, we will hunt all of the liquidity right here. I have this curve, you see? So this liquidity is very juicy, as well as this one here from these tops, but which one is juicier? Well, this one below, in my opinion. So if this daily divergence plays out, we will have a very violent move to the downside. Will that move change the whole trend? Well, I don't think so. But it will be violent because there's a lot of long liquidity in the area. So mark my words, if this divergence plays out, if you are in a short from the highs, you will make profit, and all of these longs, which were not closed at these or these highs, will be liquidated, and that will give us enough fuel for a nice deep retrace towards the 30, 31 or 32.8, 32.4k area. Why those areas? Well, let's take a look at the infamous pitchforks. First we had the lower target, the descending range shifts pitchfork. So we've spent a lot of time inside of this pitchfork. You can see Bitcoin has reacted to its levels very nicely. Look, we continued the markup move from the median line. You remember I gave you these entries, 26.5. If I'm not wrong, there was a 4-hour bullish divergence. I've talked about it while it was being formed. I traded it and I've showed it to you. So do you see this? We have a lower low in a price action, we have a higher low. Triple bullish divergence in the RSI and price action, and that little divergence produced this little move. So if we can safely say this pitchfork was respected, then we can say it will be respected if we go back down. This is exactly why I believe if this asset goes to 31.7 area, we will have a good chance to bounce from that area. Yes, it can go lower, it can go back inside of the pitchfork, it can reaccumulate and then shoot higher for a lower high or for a higher high towards my targets that I've shown you like 5 minutes ago, right? So my first or lowest target is anywhere around from 31 to 31.9, right? Why? Well, it's very simple. This was a breakout zone. If an asset goes back to the breakout zone, it will either confirm it as support, as a new support, which was resistance, or it will either break down into the pitchfork. Of course, my bias remains bullish when we get there. For now, it is bearish. So if you're fully hedged, if you are in a winning streak, you truly don't care where an asset will go next. And now, currently, I don't care where an asset will go next. I am in a winning streak. I was hedged, so I don't care. Let's close this descending and let's open the ascending shifts pitchfork. What is different between these two pitchforks? Well, the targets are a little bit different. This target here, if we assume we drop there in the next 7 days, let's say, will be 32.5 or a little bit lower towards the 32k level. So if we get there, I will be carefully looking for reactions and I will have for sure some long entries. If we do create a bullish divergence on the 4-hour or 1 hour in this area, that will be, my dear people, a free long entry for you. Let's move on. Okay, so for the end of this weekly analysis, nothing has changed. The daily bearish divergence is still there. I still expect a retracement down. I have a lot of confidence, technical confidence, and now I'm gonna talk about the the another confluence that I have, that is the psychological or sentiment confluence. So once again, for the end of this analysis, my bias remains the same. I firmly believe we will revisit 3132K region as a retrace, and then we can continue up. Will we continue up? No one knows, but it is a very good place for a bounce. Okay, my bias remains unchanged. The only thing that can change my bias is a complete, and I repeat, a complete invalidation of this bearish divergence. For that to happen, we would need to go much higher, and by that time we would form the triple bearish divergence. Okay, we could have a deviation above this wick liquidity hunt. Okay, the final phase of the distribution phase, if it didn't happen already, and then we can move down again. So I leave that as a possibility once again, but for now my bias remains unchanged. Okay, I am bearish for this range. I can easily be wrong, but if I'm wrong, then my second scenario plays out and we go towards the 37.2 or 38.2 and 3 level. Now let's talk about market psychology, distribution, accumulation. So we all know that market moves up and down, right? But does it always move up and down? What do you think? I don't think so. Market spends a lot of time ranging in a certain range before we have a markup or a markdown phase. Let me just turn this off. Give me a second. I'm sorry. There we are. So let's take a look at a naked chart. Okay, naked chart. We can go back to the past, but let's start with accumulation. So what do we have? First, I will mark some markdown phases. Okay, let's do that. Let's go to the past. So we have a markdown phase from, let's say, from this top here to this bottom here. That's a markdown phase number 1. This is the markdown phase number 2, right? Oops, give me a second. There we go. And this is the markdown phase number 3. Now we're gonna talk about emotions. I don't need the RSI. I will turn it off. I will change this color to red because those are markdown phases, right? When we say red, we usually think about the red color. Okay. Now, when we analyze the charts, we can literally see the market psychology in the charts. How is that? Well, let's go back to the past. Let's take a look at this markdown phase from 60K approximately to 45K. What had happened there? Well, we had a markdown phase. Many people got liquidated. Some people took profits. I remember shorting every single of these local highs. And now what happens after we have a markdown or a markup phase? Well, as you already know, retail is usually not so smart. Okay, so after we have, remember these words very well, after we have a markup or a markdown phase, we will form a range. Okay, how is that range being formed? Well, very simple. When people see a very violent move to the downside, they think it will continue from there. They think, oh no, it's over. Let me make some money, let me short. So, can you imagine the number of people who have shorted this wick? You know? This wick isn't here by accident. It's not a coincidence. It is showing us that many people have shorted this wick. They got instantly liquidated or stopped out or trapped. And there were some buy limits out there of people who were ready to buy and catch this knife. Then what do we have on the daily chart? We have this consolidation, right? Let's go back to the 4-hour chart. I love this range. I always loved it. What is this? Okay, let's go back to the 4-hour chart and let's take a look at this range. What do we have? Well, we have an established bottom, right? We have the first high at the 52K and we have a descending resistance line, right? So we have this one, we can draw it from the candle bodies like this, it doesn't matter. We can draw it using the wicks, it really doesn't matter. And whatever you use, both will show us some results. So what do we have there? We have a range. Why is the range happening? Well, the market gets highly emotional. Remember that, okay? So I'll type that. After a mark up or a mark down phase, retail traders get highly emotional, okay? Why is that? Well, we had a violent move. 50% of crypto Twitter or any other platform says we're gonna keep going down, and the other half says no, this is the end, we're not gonna go any more down, we're gonna go up. And what happens? We are forming a range. We can see that we had 2, 3, 4 liquidity hunts, right? What did Bitcoin do here? Well, it broke out from this descending resistance line. It retested it as support and continued higher. Emotions were very high here. And what do we have here? We have a typical double top with a liquidity hunt right here. So I repeat, after a markup and markdown phase, retail traders get highly emotional, okay? They enter positions with no bias, okay? That is how the range is being formed. That's what forms the range. And when an asset collects enough short and long liquidity, it will continue in the original direction. So what had happened here? Well, we had a slightly higher high than this week, while in reality we have just retested this breakdown point for the second time. Retest 1, retest 2, retest 3, and a continuation downwards. What do we have here? Okay, let's move these letters here, and let's say what do we have here? Well, we dropped from 52k or from 40k, doesn't matter. We fell down to 39k, 40k, right? And what is happening? Once again, we are forming a range, right? After enough liquidity has been gathered, we continue with the markdown phase, okay? And now we get to the most interesting range that I have ever seen personally. I remember trading this range, it was a very rewarding range, and let's talk about it, okay? So that is the range from January 2022 up to the, let's say, May 22. So this range has lasted about 5 months. Now, can you just imagine the amount of emotions people had here? I still remember people saying, oh look, this is a typical accumulation phase, we have dropped a lot, let me see, from the all-time high to the bottom, 50%, this is enough, we will go back up, blah 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 this, blah 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 that. Other people were saying we're gonna drop here. Did we drop? No. They said we're gonna drop here. No. Did we drop? No. What did Bitcoin do? It created lower highs and higher lows at the same time. Is that bullish? No. Is that bearish? No. Is that emotional? Yes. So what did this asset do? I remember we had the FOMC around this date, or somewhere here, and what happened? Bitcoin created higher lows, it created a higher high, the first higher high in this bear market. And what happened next? People got highly emotional, they've been waiting for 5 months for this range to break. Many people lost a lot of money here because they were expecting the markdown phase to continue, or they were expecting a markup phase to start. Okay, so I said it before and I'm saying it again. After we have a markdown phase or a markup phase, an asset will create a range, and we will stay in that range until enough liquidity is being gathered for the continuation of the move or a move in the other direction. So this is a textbook example of trapping greedy traders. What did people do? They said, okay, this range has been here for 5 months. We did create a higher low. We did create the first higher high, right? And look at what happens on the smaller time frames, on the lower time frames. We can use the daily too, okay? I'll draw the rectangle. So this was a resistance, right? Can we agree on that? Yes, we can. This was a resistance, a range resistance. What did Bitcoin do after breaking this resistance? Okay, what did it do? Well, it perfectly broke it, went back down, retested it, and continued higher. And I can bet that many people said, okay, this is a perfect retest, now this higher high will turn into another higher high. But what had happened? We rejected in a nasty way. And if I remember, well, this was the very important fib level that we had here. I am gonna check it, give me a second. So this is July, no, I don't need that. There is our range. So let me see, what did we have here? Just a second. Did you have a chance to enter a short? Let me just see. No, on this exchange it didn't hit it, but I remember it did hit it on Bybit. Or was it this pool? Yeah. You can see it here. So you had many chances to enter a short. So why am I saying this? I am teaching you this. I am saying this only to prevent you from making stupid moves and jumping onto the train too fast. So at the end, this was a redistribution pattern. Okay, we fell down to a certain level, we couldn't break it, we couldn't continue the markdown phase. Okay, the market makers, they needed more liquidity. They created a range along with the retail traders. They created a perfect bull trap only to break the whole range in less than a month. So we've been here 5 months and it took us less than a month to break the whole range to the downside. So guys, when things get highly emotional, like here, be careful, mitigate your risk, and always have your bias zones. What are bias zones? Well, I don't want to say that is my concept. I mean, I gave it a name, I use it in my trading style, in my strategy, but I have that one. So when I look at the structure, what do I see? I see this low here, I see this higher low here, and I see, let's say, this higher low here, and of course we see the lowest low this week here, but it is too far away for my taste, so I'm gonna use these here. What is Bitcoin doing with these levels? So we did break down, but ideally that could just be a retest, right? Retest, continuation, retest, continuation. Instead, Bitcoin turned all of these supports into resistances. And look what happened the moment we broke down this important level. Or let's say this one too. Let's put this one too. 34.3, right? All of these lows are important. So those were my bias zones. Why bias zones? Well, I remained bullish. I was in a short, but I remained bullish for the range. Why? Because we have a higher high, we have higher lows. But I was very careful because I knew we are in a bear market. I knew that every single consolidation, every single range that we had was just a continuation pattern for the bear market to continue. So I said to myself, Phil, if we hold these levels, yes, this range can continue and we can go above 52k. But if we lose 36, 37, 35k level, things will get messy and we will continue down in a violent manner. And that's exactly what happened, okay? So we can mark these breakdown points. If you have time, if you want, you can check out my Twitter, okay? You can scroll down to January last year and March, and you will see that I have said that these are my bias zones. I don't need to prove myself to you or to anyone else. If you want to check me out, scroll down. You'll need good 15 or 20 minutes to do that, or maybe 10 minutes if you're fast enough, and you will find my post where I tell you that if we lose this level, it's gonna get ugly. So let's mark those levels. We have 36.5, for example. We have this one 34k, and we have this candle here 35.4, 35.9, right? We have those levels. Now we can go back to the present. But I think there's no need to do that for now. Let's take a look at something else. Let's take a look at the all-time highs, right? So we're gonna draw a simple line here. That was the previous all-time high, right? What is happening in this range? First, we create the new all-time high, 66, 67k, right? What does Bitcoin do? It goes back to confirm this breakout point as support. It goes up. It has, I remember it had crazy wicks up and down, and we do create higher lows. What happens next? We get the new all-time high, 69k. People are very happy. Plan B is jumping around his room and saying, my model is the best. I told you we're gonna go to 100k in 2021. But market makers, institutions, and smart money, people who know what they're doing, had a different plan. What did they do? Well, simple as that, right? They created a new all-time high. They went back down to create the first lower high in this bear market. I remember shorting 66.1. Yeah, that was the zone. I remember well. And entering many more shorts below. So why is this interesting? Well, is this the place where people were highly emotional? Ask yourself. Go back in time. Try to remember what did people say and post on crypto Twitter. I can assure you they were very emotional here. Why? Well, didn't I tell you? After a markup phase, retail traders get highly emotional. Is this a markup phase? Yes, it is. Did people get highly emotional here? Yes, they were. So a lot of liquidity has been gathered here, collected, and that liquidity was fuel for the start of the bear market. Okay? Let's go back. What happened here? Let's take a look at May to July range 2021, the infamous accumulation phase. What happened here? People were very emotional. They said, okay, we have the all-time high, we have a very violent move towards the downside, right? The markdown phase. Then asset will continue going down, right? Right? Well, no. We had this week, we had this lower low, and we had this spring here. So what was happening here? Market was highly emotional. I remember this time. Everyone was saying we will go to 15, 20k. The other people were saying, nah, we're gonna go to the all-time highs. And of course, one of those groups of people was right. We did get the all-time highs. But what my point is that when you see a highly emotional range, please be careful. Please take profits earlier, and if you really want to be in a swing position for the reversal or for the continuation, try to catch the highest highs and the lowest lows. And that is why exactly I said ideally you would have a long from the bottom of the range and short from the top of the range. When you are fully hedged, you don't care where an asset will go, right? So let's say that if you had a short here, or let's say here, and you had a long from here. Now, would you care where Bitcoin goes in the next few months? No. You have two perfect swing positions. One gets stopped out, the other one is in play, right? You can take partial profits here, partial profits here. You can add to your position, so now your entry will go back here. You can take more profits there, etc., etc. So my point is, whether it is a accumulation phase or if it is a distribution phase, your job is to recognize that. The worst thing you can do, okay, mark my words, write them in stone. The worst thing you can do after a markup or a markdown phase is to enter a swing position and expect an asset to continue going up or to continue going down. So I made that mistake many times in the past. Okay, I saw a markdown phase and I enter a short, for example. Let's say, for example, I'm just talking hypothetically. Let's say that we do have a short here. And why would you expect the markdown phase to continue so quickly? Yes, it did continue, but an asset found some support and it went back up to your entry to stop you out before continuing down. So I repeat, after a markup or a markdown phase, the best thing you can do is to take profits earlier, to be careful with your bias and to establish the bias zone, because an asset will never continue the markup or the markdown phase like that. Okay? So when you identify a highly emotional area, you know that's a distribution or a accumulation. What that will be, you can never know, but you can be fully hedged, right? Now, I've talked about the past enough. I've had my points. I said something very important. Now let's go back to the present. What happened here at the 15, 16, 18k range? What happened here? Do you remember that? Were people highly emotional? I would say yeah, right? Yeah, they were highly emotional. Some of the people said, we will go back to 10k, this is it, this is the end, all the altcoins will die, blah blah blah, sell your bags, etc. And some people said, we're gonna go to 100k, blah blah blah. I would say neither one of them were right. Why is that? Well, this was a range. Did we have a markdown phase? Yes, we did, right? And what did I say? What happens after a markdown phase? Price consolidates, okay? An asset consolidates before continuing the move or reversing the move, right? Simple as that. So the worst thing you can do is to enter a short immediately here and expect the markdown phase to continue. The best thing you can do is to secure your profits, maybe look for a hedge long, etc. Okay? So this place here was the best time to buy altcoins that are going wild right now. Okay? Many of the altcoins that I've been looking at are rising. You should take some profits, maybe you should buy more. I don't know, it's none of my business. Your trading and your investing is your responsibility. I'm just here to share my knowledge, share my experience, and try to help you not to lose so much money. Maybe win some money, right? Make some profit. So, markdown phase, market is highly emotional. What happens next? We have markup phase, right? Now let's take a look at the present, right? Do we have a markup phase? Yes. Do we have a consolidation, a range? Yes. Do we have a temporary reversal? Yes, but that reversal is just a confirmation of a breakout point, right? We go up. Now, why did I talk about all of this? Why is this my educational video? Well, I've shown you many examples from the past, how the range is being formed, why is it being formed, and what happens after the markdown and the markup phase, and before that phase. So do you remember these bias zones of mine? Yeah? From May 2022. Well, no wonder, because those were the most important bias zones on my chart. What do we have now? Now, a year and a few months later, we are at the same place. And we are trying to reconquer my bias zones as support so we can continue higher. Can that happen? Of course. Will that happen right now in the next 14 days? I believe not, because why? Why is that? What did I teach you like 5, 10, 20 minutes ago? I taught you that after a markup phase, market gets really emotional, a range is being formed to gather enough liquidity for the continuation of the move or for the reversal of the move. Now, I want you to open your Twitter account, okay? Watch and carefully observe all of the posts, even from the people that you don't like, okay? Like this guy, for example. with his triangles and disgusting technical analysis, if I can call it like that. And look what are they saying, okay? Many people are saying we're going to continue towards the 40, 50k. The others are saying this is it, we will go to 10k. That is madness. That is madness. So I will identify and I will conceptualize this range as a highly emotional area, as a range where market makers will chop, 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 chop until they gather enough liquidity for the continuation or for the reversal. We do have the daily bearish divergence, and that is one of the biggest reasons, if not the biggest, why I remain bearish for this range. The move is still bullish, it's intact for now. You cannot lie to yourself, okay, this is a very nice rise. Is this a bull market? Who cares, right? If you're an investor, you know where you buy and you know where you sell, at least partially. So even the best investors, they don't know when it's a bull market or when it's a bear market. They don't care, they only watch the levels and they have a plan, they stick to their plan and they do their job, okay? And of course they bear their own responsibility. So what is my point of today's video? Guys, when you analyze psychology of the market, you don't need to look at other people, you don't need to look at how others feel. If you want, you can look at how you feel, okay? Observe yourself, say to yourself, okay, why am I highly emotional? Why did I say to myself the range will break to the downside 5 times and it didn't break? Why did I say to myself the range will break to the upside 3 times and it didn't break? Well, identify your own feelings. Then realize that maybe, just maybe, after a markup phase, as well as the markdown phase, price or an asset will consolidate before continuing the move, reversing the move, or continuing the move. Now it's pretty much the same, right? We have the markup phase, we are forming a range, and until this range is broken to the either of the sides, it is foolish and it is very stupid to say we will continue higher or we will continue down. Why do I think we will continue down? Well, I stick to the technicals. Reverse down, because I stick to the technicals. If I see a bearish divergence on the 1-day chart, I say to myself, okay, this was another very violent markup move. And what had happened after every single markup move? We did have a deep retracement, right? A deep retracement, a sell-off, consolidation, markup. Now we have a range. Will we have another sell-off? I don't know. But that's what I see on the charts, and that is why I am insisting on that to remain my bias. Can we create another high and a triple bearish divergence? Yes, we have. Will I be wrong if that happens? No, because I have a plan for that and I have just mentioned that as a possibility. Can we create another high triple bearish divergence, retrace a little bit and continue up? Yes, we can. I don't see why not. Yes, we can. But if that happens, we would have a weekly bearish divergence, but let's not jump on the trains too early. Let's not talk about the distant future. Let's talk about the near future. So my bias remains the same. We will retrace down after we gather enough liquidity in this area. I have clear technical reasons for that, and I will change my bias only if we reconquer these highs as supports and show some clear signs of strength. Until then, nothing has changed. We can go a little bit higher towards the 36.7 or maybe 38k, but I would be very careful in this range, okay? So that's it, guys. This is a very interesting topic. I am very glad to be filming this video for you. Why? Because I believe it is very useful. One of the most helpful videos that I made so far. So if you have any questions, feel free to post any comment. Ask me what I think about this or that, and I will take some time. I will find some time to answer to all of your questions. If you want me to analyze some of the altcoins or anything, I will do it for you, and I might start analyzing some of the juiciest coins out there on the market. Before we finish, I would like to say one thing. As of this weekend, I have partnered with the MEXC exchange, Pragmatic Trading. I am their official partner. I have been thinking about that for a very long time. I see that they're trying very hard, and I've seen that they have the lowest fees. So I did check that out. They do have the lowest fees currently. Of course, if you have suspicions about this exchange, no one tells you to put all of the eggs in one basket, okay? Divide your funds and put some of them to test out this exchange. Exchange is nice, it doesn't have crazy wicks so far. I've been trading there for a while and I truly like them. So I'm not shilling them, I'm their official partner. If you want to support my work, if you want to try out this exchange, I would be very grateful if you use one of my links for the registration, right? Okay, if you take this link, the first link here, to register your account, you will have some bonuses. You can check out those bonuses after you click on the link. And if you decide to register with this link here, okay, of course, the first link, I'm sorry, if you choose to register with this link, you will not be a part of this, let's say, bonus reward competition and event. You will just have some regular bonuses and you will help the construction of my YouTube channel and my trading communities. So if you want to try out this exchange, please feel free to use one of my 2 referral links. I will be very grateful, and that is one of the ways to support my channel. Of course, if you like my work, if you like my educational content, if you like my weekly analysis, if you like what I'm sharing with you, please consider subscribing to my YouTube account, right? Please consider subscribing, like this video, share this video with people who might find some value, and for the end, I truly hope you find some value in my videos and in my educational content, okay? So, I've talked about what I see for this week. I've talked about how markup and markdown phases occur, what happens after or before them. I've talked a little bit about market psychology, and I truly hope you found this video useful. Until next time, I wish you a successful week full of peace, love and health, and I wish you all the best. As always, Pragmatic Trading loves you much. See you next time, guys.